Years of finding brands that capture a billion.
Thanks for joining us on Parlance. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Markets are set to end the week on a high note. Nifty trades firmly above 10,650, led by gains in telecom and banking stocks. The RBI Central Bank Board will take up at least 4 issues at its meeting on Monday, including a review of the prompt corrective framework and easier lending norms for MSMEs. The government is said to have nudged Tata Sons to buy a stake in Jet Airways. That's a Bloomberg exclusive. Myntra announces its merger with Jabong. Sources say Jabong's workforce may be cut by 40%. We'll get to all of that, but first, the markets this Friday. It seems to be a good day for the markets, at least for now. Neeraj is here with a closer look at some of those stocks that have been moving.
And not led by banks, Harsha. Good afternoon. So for a change, it is the non-banking spaces. Not that banks are weak. Bank Nifty is too about 1/3% higher. But the Nifty and the Sensex up about 0.5%. So clearly shows that banks are playing a part, but albeit a smaller part in trade. In fact, NBFCs have taken it on the chin today. So the usual suspects. Yes Bank, Indiabulls Housing Finance, Diwan Housing Finance, all of them are down in the session today. Yes, for, of course, other reasons too, but that's happened to Indiabulls Housing Finance today for a second in a trot. Today, Diwan is down about 5% as well. I think all the conversations around the roles of commercial papers are not scary, but it is having its impact on these names. So what's doing well? Let's bring up the Nifty 50 gainers list for you, and I just want to then take a quick detour to the turnover as well. But first, let's look at the Nifty 50 gainers list on our screens, and you will see that select exporters are doing okay. Bharti Airtel has the big move today, 5% higher, but select exporters, HCL Tech, Cipla, we saw some of the other large cap and mid cap IT names to doing well, half decent for themselves. So it's not been a bad day of trade. The big boy Reliance Industries is participating in the session today. And when you have Reliance and IT doing well, it's difficult for the index to go down quite materially because that's a fairly heavy percentage. And if banks are not doing all that poorly, then kind of makes up for the kind of pain that is there. That aside, just as I said, one, the market breadth, and two, the turnover. I want to bring up the turnover in particular. Yesterday, we had a pickup in the turnover only in the last half an hour of trade. In today's session too, the breadth has kind of come off in favor of the decline. So that is one part. But the turnover will come up on your screen. Not the expiry day, so the F&O volumes would be lower. But the cash volumes at about 21,000 odd crores at about lunch mean that we'll nudge that 31,000 crore mark. So the volumes the last 2 days have seen a bit of a pickup. All eyes will be out on Jet, of course, Harsha. So that is that one big key stock to monitor. After starting off in the red, it went up in the green and staying about 6% higher after the 30% up move yesterday. So this is one stock to monitor for sure.
Yes, thank you for that. That's exactly what we're going to be talking about now. N. Chandrasekaran, chairman of Tata Sons, will make a pitch to the Tata Sons board. The group chairman will propose that the Tata Group invest in Jet Airways, a plan that has the government's backing, say some people in the know. Bhuma Srivastav from Bloomberg News now joins us to tell us what exactly is in the works. Bhuma.
So the Tata Sons board meeting today, we heard that Chandrasekaran is going to pitch to the board why they need to look at these assets, what are the details of it, what level of due diligence has happened, and what needs to happen. And that's largely kind of keep the board in the know. There's been so much media speculation, so much back and forth about it, that we get a sense that Tata Sons wants to keep their board in the loop as they go about it.
We also understand that this has the government's backing. How? Why?
So what we hear is it's a bit of a nudge from the central government to make sure that Tata Group does look at it seriously, goes ahead with it, for the simple reason that so close to the election time, you don't want another blowout with the corporate governance kind of issues, with anything that can possibly lead to job losses, a market rout, or any other ramifications. So there is interest from the government as well to put this issue to bed and make sure that Tata Jet doesn't become a bigger problem than what it is now.
Very quickly, how does this fit into the Tata scheme of things? They already have an existing airline, Vistara, an investment in AirAsia.
Yeah.
But then how then will it fit in? Do we know how this, if at all this goes through, the structure of what a possible entity would look like?
So it does make sense for the Tata Group in case they're looking at market share, a dominance of Indian skies, because they already have Vistara in place for the full service airline and the low cost of AirAsia investment. But Jet will add something very essential, which is parking bays, landing slots, aircrafts, a staff that's fully functional. So those things are hard to come by in today's aviation sector. Adding that to Vistara, either merging as an entity or keeping it separate, either ways, having that kind of a hold on Indian skies is something that works for them.
Okay. Bhuba, thank you for that. But let's look at the other side of the story. Does it really make sense for Tata Group to look at this debt-ridden airline? What are the cons? As I mentioned, it already has presence in two airlines, one that it entirely owns with Singapore, that's Vistara, and an investment in AirAsia as well. Sajid is here to give us some of those answers. Sajid.
Harsha, what we understand is that it's very clear that they're not going to have the third airline. It's going to be one merger with the existing airline, which is the full-service airline. Today, you have between two full-service airlines in the country, which Vistara and Jet. It could be a merger of that going forward, and that's where Singapore Airlines also comes in, because you will have you have to buy out the Etihad, which has 24% in Jet, and they've been looking at an exit for a long time, and someone will have to buy out Naresh Goyal, which has a controlling stake in Jet Airways. From the operation point of view, the Tata Group is confident that they can turn around this asset, given if it has a professional management managing it, minus the promoter. So they are looking at it, saying that okay, there has to be a clean exit of Naresh Goyal from the Jet Airways, and then you get in a professional manager, and there is enough room to do it. Given Chandra's experience in the airline industry when he was in TCS, because TCS had a relationship with almost every global airlines, like British Airways, they've been doing for 25 years there, so they know what it is. They have a relationship with KLM and other airlines as well. So from the operational point of view, they know what needs to be done to streamline the operation and bring in efficiency. So they are confident about as far as turning around Jet Airways is concerned. The question is at what price and at what due diligence, which is continuing, which is presently going on. From a Jet point of view, Jet is sitting on 22,000 crores of liability. In FY19 itself, they will have to pay out 3,000 odd crores.
33.
No, 3,000 odd crores in FY19, which is coming up for payment of the 22,000 crores liability which is there. And in the recent half-yearly conference call, they said that they still have to pay out 2,000 odd crores. So they are sitting on lack of liquidity, which is their negative net worth. The interest coverage ratio is very low. They've been able to tide over because they got some incentive from Boeing in the first half of the year that allowed them, gave them some 1,600 crores of cash, and that allowed them to roll over some of the liabilities which is there. But going from here to the end of the financial year, they have to pay out this 2,000 crores of cash, and there's no way there is going to be a rollover happening, because banks and financial institutions are reluctant to lend, given the fact that there's no backing up which is going to come in. So the only way for Jet is to either show that it has a strategic partner coming in form of Tata's, or Tata's is saying that they're going to take it up. Then only this thing will go up, and once that happens, it's easier financing for the entire Jet Airways going forward. The other thing which is very important from a Jet point of view is from the shareholders' point of view. We've been hearing about government nudging, asking state banks to basically go for a haircut. I'm not sure how much it will be there, but from a Tata point of view, it is very clear that they would like to get it at a least cost for equity, because there is a huge liability which comes as part of the exchange, as part of the airline.
Okay, let's see how this plays out. Thank you, Sajid, for joining us. That's the story on Tata Sons potentially looking at acquiring or picking up a stake in Jet Airways. Remember, Jet has been struggling with its financial situation. The Reserve Bank of India's board will review a slew of policies that have brought it to a standoff against the government. On top of their agenda on the central bank's board meeting is capital framework and strict bank regulations. Siddharth Singh of Bloomberg News now joins us from Delhi to tell us what can be expected. Siddharth, what can be expected?
Basically, the discussions are again going to be around basically relaxing the capital framework, because I think the finance ministry wants that RBI should kind of loosen the way they have been calculating the reserve which they are holding on to with themselves. And the next big agenda would be the relaxation of the PCA norms, where government thinks again that they are very stringent and they are not in any way helping banks to come out of the prompt corrective action. So some kind of a middle ground, I think, would be reached on those issues. And another area which could see a decision would be the loans to MSME sector, basically to medium and small enterprises. I think government is seeking a one-time settlement for loans for up to 25 crores. So that is, I think, would be the main attention for tomorrow's on Monday.
Siddharth, thank you so much for joining us. That's possible agenda points of the board meeting that's taking place on Monday. It's likely to be a contentious one. The Central Bank board member S. Gurumurthy yesterday at a speech said the government is not wrong in seeking a review of the capital reserves policy, reiterating a view put forth by the government. He says the idea is not demanding a chunk of that reserve, but to consider revising that policy.
Reserves are concerned, there are two studies. One Subramaniam committee study, it says 12% reserves are standard. And then Usha Thorat study, which says some 18.76% is adequate. But now the Reserve Bank has some, according to the latest balance sheet, some 27-28%, which would have gone up because of the depreciation in the value of the rupee. What is the reserve of the Reserve Bank actually? The appreciation in the value of the dollar is the reserve of the Reserve Bank. You bought dollar at 42, 45, and it is now 70. Just like when you buy some shares and the share values go up, and you take the appreciation as your reserve. This is the reserve. But how much the dollar value will go down in future is a matter of proper study. And in this, some policy will have to be worked out. You cannot say, come on, it has appreciated so much, give me that money. I don't think the government is asking for that. Actually, as my understanding goes, the government is only asking for a formulation of a policy as to how much reserve the central bank must have. Most of the central banks do not have reserves of this kind at all. Only the Reserve Bank has this kind of reserve.
Okay, let's move on. The government is eyeing 20,000 crore from buybacks announced by the state-run entities in the current fiscal. That's according to a Bloomberg report. One such company is Oil India. That's going to be holding a board meeting on Monday to discuss just that. But it'll take more than just one buyback to meet the government's stiff target, especially since it's got only 1/3 the amount on divestment so far. Soumit, which companies are these that could come to the government's rescue here, and what's on the anvil?
First, let's see the companies that have already announced buyback. Now, so far, if you see, only 6 companies have announced a buyback of close to 4,400 crore rupees, which include the likes of BHEL, NLC India, NHPC, NALCO, KIOCL, and Cochin Shipyard. Now, the buyback amount ranges from around 200 crore rupees to 1,600 crore rupees. Now, the government has plans along with these 5 companies. Now, Oil India will be considering a buyback on November 19th, while ONGC will consider a buyback post-December. Now, that's what the management said in the conference call. Now, if you see, the government has plans to raise close to 20,000 crore rupees via buybacks in financial year 2019, and of this 20,000 crore rupees, so far only 20% of this amount has been raised. So let's see the companies that could raise money via buyback. Now, we are not saying that these companies will do a buyback, but at least they have the ability to do a buyback. Now, according to the buyback regulation, a company can do a buyback of maximum 25% of its net worth with shareholders' approval, and it can do a buyback of around 10% or less without shareholders' approval. So if you see companies like Coal India, Engineers India, MOIL, NBCC, Bharat Dynamics and ITDC. Now, these companies' net cash is more than the 25% of their net worth. So they can easily do a buyback of at least 25% of their net worth. Now, if you see, Coal India's net cash position is close to 38,000 crore rupees, while their 25% of its net worth is just close to 6,900 crore rupees, while that of ITDC, the net cash is close to 292 crore rupees, while the 25% of its net worth is only 88 crore rupees. Now, on the other list, if you see, now these are companies like NMDC, Container Corp, SJVN, Balman Lorry, Andrew Yule and Mishra Dhatu Nigam. Now, these companies have a net cash position which is more than at least 10% of its net worth. Now, NMDC's net cash is close to 5,400 crore rupees, while its 10% of the net worth is only 2,600 crore rupees, while that of Mishra Dhatu Nigam, the net cash position is close to 84 crore rupees, while 10% of its net worth is close to 78 crore rupees. Now, other than these two set of companies, there are other companies like BEL, Hindustan Aeronautics, Oil India and GAIL, which are also in a net cash position and can also announce a buyback going forward. Now, let's see the companies that have already announced buybacks in the last 2 years and have helped government meet its divestment target. Now, nearly 10 companies have announced buyback, and the total amount that they have raised through buyback is close to 25,000 crore rupees. And of these 10 companies, MOIL and BEL have announced buyback in each of the 2 financial years. In financial year 2017, BEL announced a buyback of close to 2,100 crore rupees, while in FY18 they announced a buyback of close to 370 crore rupees. While MOIL India in FY17 announced a buyback of 863 crore rupees, while in FY18 it announced a buyback of close to 210 crore rupees. Now, other than these, if you see, there are other companies like NMDC, Coal India, NALCO, NHPC, NLC, SJVN. They have also announced buyback in the last 2 financial years for the government.
Okay, thank you for that, Somit. Let's move on. Former SBI Chairman Om Prakash Butt has stepped down from the panel set up to search for a new CEO at Yes Bank. Butt tendered his resignation, citing a potential conflict of interest. Yes Bank has to find a successor to Rana Kapoor by the 31st of January. That's the deadline set by the Reserve Bank of India. The Search and Selection Committee has signed up headhunter Korn Ferry to help find a new chief for the bank. 3 days after Binny Bansal stepped down as Group CEO of Flipkart, Walmart has decided to merge Jabong with itself. Sources tell Bloomberg Quint that the restructuring drive is part of Walmart's plan to merge operations of the 2 online platforms. Nishant is standing by with the details of this story. Nishant.
Well, right, Harsha. In the first major restructure for Walmart-owned Flipkart's fashion brands, Myntra and Jabong, ever since Myntra acquired Jabong in 2016, now Myntra wants to integrate all their operations for the likes of technology, marketing, category, finance, and even creative teams are getting merged into one department. Now, as per the people privy to the development, this merger or sort of integration which has been done will lead to job loss about 40% of the Jabong's staff. Now, earlier today, Anant Narayan, who's the CEO of Myntra, he also wrote a letter to the employees saying that as they move towards this integration, and I quote, co-workers and friends and Jabong will be impacted. So this is the first major restructure or reorganization we are seeing in this fashion portfolio. Now, this comes just 3 days after Binny Bansal stepped down. Around the same time, Walmart even said that they're going to integrate the structure of the fashion brands of Myntra and Jabong, where they will be now rolled into a part of a Flipkart group, where Kalyan Krishnamurthy will be reporting directly to the board, and Anant Narayan, who used to earlier report to Binny, will now be reporting to Kalyan.
All right, thank you for that, Nishant. It's an ongoing story. We'll see how this unfolds. Aditya Ghosh is now going from travel to hospitality. The former Indigo president has been appointed as the CEO of hospitality startup Oyo Hotels with effect from the 1st of December. The appointment comes as part of Oyo's efforts to expand globally. Ghosh will be responsible to oversee and grow the business in South Asia, which will include India, Nepal and other upcoming markets in the region. He will report to founder Ritesh Agarwal. Tire makers witnessed a sharp dip in margins in the September quarter, but with both oil and rubber prices cooling off, can these companies reverse some of these losses in the second half of the financial year? Yatin is standing by with some analysis of some of these companies. Yatin.
Afternoon, Harsha. And if you look at the second quarter earnings for tire companies, all of them have largely posted the margins which are at a 12-month low. So, in last 3-4 quarters, we have seen the weakest of the weakest margins. In fact, if you look at CET, and the chart is up on your screen, the margins have dipped to a level of 9.1%. So, from a double-digit margin, we have seen a single-digit margin coming in for CET. And similar is the case with Apollo Tyres and JK Tyres, which have reported almost 100 to 200 basis points, decline in their operating margins. Of course, the culprit was the Kerala floods, post which we have seen rubber prices firm up, and not only that, the oil prices have moved up. Typically, to make a tire, we need 40 to 45% of natural rubber and another 10-15% of synthetic rubber, which is basically a derivative of crude. So basically, the two key commodities which determine the cost of a tire were up significantly in the past few months. But now, the silver lining is that the rubber prices have corrected nearly 10 to 15% in the last few months and is off from the August highs. And also, the crude prices have corrected, to a level of, lower than $70 per barrel. I'm talking about Brent. As I was mentioning earlier, the typical cost of a tire, 40 to 45% is, natural rubber, almost 10% is synthetic rubber. Carbon black and nylon tire, fabric and fiber is nearly 24 to 28% of total cost. Most of these costs, commodities have come down significantly, and more importantly, there has been a price hike which has been initiated by tire companies in order to cushion themselves from rising raw material costs. So passenger vehicle tire prices were increased by nearly 2% in September. We had seen a cumulative price hike of nearly 3.5% to 4% for the commercial vehicle tires in FY19 so far. So the price hikes are in place, and the raw material costs are falling down. Demand also has been good, according to brokerages, and they expect a 7 to 8% growth in demand. So given all these factors and fall in natural rubber prices, probably with a 1 quarter lag, we could see improvement in operating performance for the tire companies.
Yes, and thank you so much for putting that in perspective. Let's talk about politics now. The BJP has been in power for 15 years in Madhya Pradesh, but the party in charge for the upcoming assembly elections, Vinay Sahasrabudhe, says there is no anti-incumbency in the state. Speaking to us, he said the BJP is playing the performance card over anything else in the state that goes to vote on the 28th of November.
This anti-incumbency theory is largely a media creation. It doesn't, the evidence doesn't suggest that simply because a particular party or a chief minister is in power for 15 years that there will be some kind of an anti-incumbency. Anti-incumbency is a phenomenon which is generated basically by bad governance, by a huge amount of scams and corruption, by every kind of examples of lack of development, whether it is road, water, agriculture, or whichever the field. And all these factors, I must put it here, are absent in Madhya Pradesh. Madhya Pradesh has a track record. See, we won the election in 2003 on the basis of Bijli Sadak Pani. We provided that. Thereafter, in the next 5 years, we ensured that Madhya Pradesh is taken out of the bracket of Bimaru states. And post 2013, we have taken care of all the basic infrastructural facilities. And now we are appealing the people to help us, to vote us, to support us, to take Madhya Pradesh into an era of prosperity, which is why our slogan is Samruddha Madhya Pradesh.
The Congress manifesto is out, and a lot of commentary on it talks about how the Congress is trying to compete with the BJP on the Hindutva plank. They are speaking about the Ram Path Gaman, a circuit following Lord Rama. They're talking about a Gaushala in every panchayat district. They're talking about a lot of things that one may have thought would feature in the BJP manifesto. Do you think that this is going to remove that differentiation between the BJP and Congress? Are you looking at this as a challenge in this change of strategy that we're seeing from the Congress party?
Well, to first of all correct the perception, there are maybe dozens of areas in which we differ from the Congress. We are not a dynasty-driven party like the Congress. We are a democratic party run by the organization. We are an ideology-based party as against the Congress party, which doesn't have any particular significant ideology they can really claim about. And there are many other factors as well. But I must tell you that insofar as these things which are concerning basically the belief system or the spirituality related things, I believe, at least as a student of politics, I'm commenting this, that Congress is out on a spree of clearing their spirituality backlog, if I may describe it that way. And therefore, this is not going to impact on the electorate because they know what exactly are the real positions of this party. Take the example of cow protection. Now, cow protection is not something which has been brought on the agenda by the BJP. It has been there in the guiding principles of our constitution right since 1949 or 1950. And Congress never paid any attention to this. Suddenly, they have woken up from their slumber and now they are talking about gaushalas and cow protection and things like that. Good for the nation, good for the people. But then, whether they are really wanting this to happen or these are just crocodile tears or these are just kind of a showbiz on their part, everybody knows about it.
No, but let me come back to that then. Isn't it a key challenge? What do you think is the biggest challenge right now to the BJP in Madhya Pradesh?
Because, let me explain you, Yeah, I'll tell you, this is certainly not going to be posing any serious challenge because Congress doesn't have any track record to tell about insofar as governance is concerned. You will recall that it was the Prime Minister Narendra Modi and then party president Mr. Amit Shah who first of all used the coinage which is politics of performance. Now, have you ever heard any of the Congress leaders talking about performance, talking about development? They will never, because they don't have anything to report about. There is total bankruptcy insofar as all these developmental things are concerned. And therefore, they are trying to enter into the mind space of the people through these kinds of big gimmicks. And I'm sure people are smart enough and they're not going to be hoodwinked.
No, I mean, the fact is that Madhya Pradesh is a two-horse race. It has been a bipolar contest for a while. The BJP hasn't been in power for 3 terms. You say that anti-incumbency is a media creation, but Mr. Sahasrabudhe, you must admit that you have to find something new to go to the voters each time. And is that perhaps one of the reasons that even now BJP leaders start talking about the Digvijay Singh government of 15 years ago? Is there a real challenge of presenting new ideas?
Because no, why? This Samruddha Madhya Pradesh is an entirely new idea, and we have provided a roadmap towards prosperity of the state. See, as I said, there is a sequence. Where was the state before 2003? And therefore, if we are talking about pre-2003 era, it is but natural because that is the only factor which is there live in the popular memory. And therefore, we must be reminding people that these people are wanting to take this state in that era, which was the era of deprivation. There were not even basic facilities like road, water and energy. And I am surprised when they are talking about certain things in their manifesto that perhaps they are wanting to take this state further backwards to pre-1977 era, which was the era of emergency, which was the era of banning organizations. So everybody knows what are their basic intentions, what are their designs.
You're talking about the portion in their manifesto where they say that RSS activities will now not be conducted from government organizations, if I'm not mistaken. Is that what you're referring to?
Yeah, I mean, all kinds of mentions are there. So their intentions and their animosity towards a movement like RSS is not something which has happened only in Madhya Pradesh or it's a thing of the recent past. It has been there.
But they have clarified, though. Kamal Nath did come out and clarify that we're not asking to ban the RSS. We're just saying don't use government premises for organization activities of the RSS.
But this is their figment of imagination. He should come out with a list of government institutions where RSS is using their premises.
All right, out of time on the show. Thank you so much for joining us on lunch today.